Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to the Hedged Edge. I'm your host, Jeff Eisenberg. Today's podcast hits right at the heart of a tug of war happening all across America's farmland. Should I stay or should I go? But rather than asking a girlfriend the question, farmers are asking their agronomists and chemical salesmen, what is fertilizer going to cost me the rest of the season? And what are my options if I don't want to go all in on my typical fertilizer treatment plan? Today, we're joined by a special guest who needs no introduction in his local circle, Dick Stiltz. Dick is a 50-year veteran of the fertilizer and chemical industry and is the current agronomy marketing manager of Procurement, Fertilizer, and Crop Protection at Prairieland FS, Inc., Jacksonville, Illinois. Dick is at the pulse of the current struggle. Should I stay or should I go? Dick, welcome to the show.
Good morning. Thank you, Jeff.
Well, Dick, I have to ask you tell me this is your first podcast.
It is, very first podcast. I mean, there's been a lot of speaking engagements and travel, a little bit as far as political atmosphere, several webinars, articles written, but the first podcast.
Yeah. So when you started in this business, those years ago, did you ever imagine it would come to all of this technology and communication?
I started, Jeff, before we even had computers.
Yeah. That's great. Well, now you'll be the voice heard around the world. So,
oh yeah, right.
Excited to chat with you here today. So here we go. I mean, it's a wild time to be in these markets. Prices are at historic levels or near historic levels for obviously the grains that are actually produced, but also for the inputs. And we've got the war in Ukraine. We've got, fertilizer costs being driven up because of where fertilizer is produced and how we harness it and bring it in. It's raising a lot of questions for many people. But I guess the first question off to you is, at the local level, the microeconomy, what is the message back to the farmers that you work with and consult with on a day-to-day basis?
Well, I think the biggest thing, Jeff, is, and you hit it right on the nail on the head here, we do have increased prices as far as input costs, et cetera. And that is adding stress at the farm gate. But the key is where commodity prices are. How do you manage all that, and how do you become a astute business person to where you can lock in and use all the tools that we have to look at profitability? We've got a home run here, and you can be in the Hall of Fame if you're a single hitter, but too many times why we want to hit that grand slam, and we want to be at the top when we sell our prices, whether it be corn, bean, cotton, wheat, whatever that commodity may be. But in essence, manage everything that we have, and sometimes take a little bit of time. Thank yous as far as all the consultants that we have. People like yourself is here with marketing, people like myself that are in the input side, your bankers, et cetera, and how do we lock in, put it all together. It's quite the equation. We've got a lot of different variables. It's a huge chess game, but let me tell you, there is opportunity out here, and I think we're realizing those opportunities today. And, as long as we can make a profit at the farm gate, you're going to continue to be in operation for next year and hopefully several years afterwards as well.
Yeah, that's a great message. And I think the important point you're driving home is the global economy. We can all speculate what might happen, but it's at your local level that, the decisions really need to be made. And I greatly appreciate, people like yourselves with the experience you have to help guide people through it. So, here we are. We've got some higher prices. We're well behind in the planting, situation. How is that then applied to the fertilizer market? If people are saying, I can't get it in, are they buying? How far advanced are their purchases on their fertilizer now, or is it kind of shop as you go?
Well, in most cases, spring inputs are in place. Now, not all inputs. Yes, we still have traffic daily on a daily basis. We still have river traffic. We have problems with rail, as we have read recently here, and that's affecting fertilizer deliveries. But in essence, fertilizer is there. It's available. We just got to get it at the right place. I think most of the volatility in the marketplace is somewhat over. We just need to get the product on the ground and get this crop planted, and then we'll deal with, as far as increased problems, I'm sure, on availability and supply for the fall. But as a whole, probably 80-85% of the product is in place. It just needs to happen, and we will have delays because of truck transportation. But I think in this area, we're in a pretty good position.
That's really good to hear. That's great feedback. And obviously the COVID delays, like you're saying, infrastructure, logistics, things are, part of what everybody comes to expect. I mean, it takes longer for me to get my pizza, I'll be honest with you. So, but you mentioned something to me when we first met the other day, and I asked you the question. I said, do you think that producers, based upon these higher prices, are going to try to maybe scale back and say, well, if it's a higher price, maybe I won't do as much of my plan, or maybe kind of scale back. You made mention that fertilizer is what percentage of the yield?
60%, and some you'll see even higher than that. But on a global basis, 60% of our yield does come from nutrient and nutrient management. So fertilizer plays a key as far as what we're going to produce in a crop season. And I think what's happening right now is the emotion, and of course the media is it's just not your nightly news, but farm news as well, and people get caught up in the emotions, and they're looking at 200% increase here, actually higher in some nitrogen products and phosphate or potash, etc., from a year ago. But at that time we were almost at an all-time low, and now we went to an all-time high. But they forget to sit down, and we talked about those specialists. It's not difficult. It's not rocket science. But put that on a piece of paper and see what your opportunities are. Use good agronomic management, nutrient management, the 4 R's, etc., and in essence, maximize your capabilities, maximize as far as your yield. It's kind of like your diminishing returns here in econ. Some cases why we might have cut back on fertilizer. We, as a retail dealer, I've seen it some this fall. I'm seeing it as far as this spring. Some of that's going to be pressured because the lateness of the planting season, and they're just feeling like, ooh, we don't have time to get that job done. And that's going to catch you in as far as the pocketbook, because at $6, $7, $8 here on corn and beans from 14 to 17, depending on new crop, old crop, etc., delivery points, we have some excellent opportunities. So don't cut yourself short by not doing a good job of management.
Curious question. If, let's just say, you go scale back 1 year, maybe is there a scenario where it's not as impactful this year, but then it really comes back over the top and affects the whole crop or the land the following year, or the 2 or 3 years thereafter? Is that is that a real scenario, or is it got to be every year?
It's something actually we as a fertilizer dealer and as a farmer, they need to look at every year, and it's called start with with a soil test, a good soil test. And I like grid sampling. It needs to be done every 4 years, and then see which way you're going, whether you're going up or down. Know what you're putting on, but also know what you're removing. And guys, with yield maps and the technology we have, you can overlay all that data. You can do a very great job of managing and putting those inputs where they need to be, so you can maximize as far as the dollar that's being spent. So yes, start with soil test, and if you don't have a current one, then let's look at getting a soil test as far as this summer, early fall, late spring. Actually, I mean, before nutrient uptake here, and contact the people that you work with, your specialists, etc., and make that happen, so you know what you have in the bank. So then you can manage your dollar more wisely and look at each field separately, and then combine those. You actually may not spend any more for nutrient management. You may spend less, you may spend more, but the ideal is to maximize your outcome, and that is in the yield in bushels, whether it be corn, soybeans, like I said, cotton. But start there in your bank and see what you have in your savings account, and know what you have in P&K, and then let's manage everything. And nitrogen management is crucial. 2-3 trips across the field with nitrogen, normally why you're going to look at increased returns every time you go across that field.
Yeah, and the final point on this kind of local area management is that at the end of the day, it's this year's crop is financing next year's crop.
It is.
And so with that, let's kind of take a little broader view and discussion, and make a shift and start to talk about, well, we've got the war in Ukraine is continuing, showing no signs of backing off with Russia. Massive amount of fertilizer is produced in Russia, and the logistical needs to move fertilizer from other locations like Canada to the rest of the world is going to become a challenge. So I guess, from a forward-looking standpoint, I'm an economist myself, and by training, it doesn't seem that there's a massive reversion to the mean or lower prices ahead. I mean, what is your sense?
Well, I think you're absolutely right, Jeff. As far as short term, and what is short term, but definitely looking ahead for the next 6 to 18, maybe even 24 months, I see very little change out there, and it's something that we will have to work with and deal with. And I think the farmer needs to accept that right now, and become entrenched in the fact that it's going to take key management. The risks are going to be higher, but sometimes the rewards are very good. I just read an article here this morning where they're bumping up farm income for this year, and that's even above the increased costs that we have as well. And it just goes back to where commodity prices are right now. So let's take advantage of those opportunities, accept the fact with that we're going to have higher input costs, availability, supply, their demand. It's all an issue. And we were talking earlier, okay, this world has become a lot smaller. We understand, as far as in the global marketplace, what country does this and how we react from that. But when you look at the management of our inputs, we're very dependent on the global supply in the marketplace. Russia, Ukraine, China, Morocco, Canada, those are all variables. And we have had so many changes, and we know that Russia, they are a key when it comes to selling as far as their natural resources, oil, gas, and the products from that. And nitrogen is one of those. Ukraine is the breadbasket of Europe in that situation. So we haven't stopped all of those resources coming out of those two countries or grain, but we have slowly impaired them, or greatly impaired them, where how much of a factor they're going to be in the next 6 to 24 months We don't know. And everyone's speculating how much crop they'll get planted. The key is how much they're going to get harvested. And then how are you going to get those exported? They're looking at rail, but water's pretty much shut down. We know that Russia is exporting some potash to Brazil right now, and it's still coming at a tremendous cost. Right now, potash going into South America, especially potash, into the Brazil market, Argentina, etc. That's costing, we're paying a high cost here in the U.S., but into South America right now, they're $150 to $200 more a ton for potash. And so that demand is there. And that just shows you the price is driven up because the limited amount of supply that we have. When you take Russia and Belarus out of the marketplace and they can't export, so that's almost equal to the tonnage that comes out of Canada, out of our potash mines in Canada. They're 30% of the marketplace.
Dick, you mentioned, I asked a question, I'll ask it here. So what about the United States? We have one of the largest resources of land and opportunity, in the world. What percentage of, it sounds like we're importing everything related to potash, phosphate, nitrogen.
We're not.
What do we need to do to turn that around and bring it more local?
Well, one of the things, everyone thinks that we do produce everything within the U.S. that we utilize at the farm gate, especially in fertilizer, and we do not. I'll take the major nutrients, NPK, and I'll kind of reverse that a little bit. Potash, our production of potash in the United States is almost minute. It almost doesn't exist. We have veins of potash that come down in the Dakotas and the Montanas and Idaho, but it's too deep to economically mine at this time. So we rely on almost all of our potash to come into the U.S. From some other country. And of course, Canada has great reserves of potash. That is the number one source, and Russia and Belarus are right behind it. And then we have the Israelis, and I'm bought product from all three of those countries and from others as well. But those are your main source. Now you get into phosphorus. We have a basic manufacturer here in the U.S. And I'll just say Mosaic, and Mosaic does a very good job. They supply most of their P is internally used within the U.S. They do export, and they have other mines in other countries. They recently invested in South America as well. But phosphates, or a lot of the phosphates, are produced here that we use at the farm gate, comes from the U.S., as does nitrogen, and in all three forms. But we actually still import some nitrogen, and not all of our nitrogen is used for agricultural purposes.
Right.
And a lot of our ammonia is used in the industrial and commercial side. And of course, once we got business started back up, the demand was very heavy for that. And of course, the feedstock for nitrogen products is natural gas, and natural gas has went up. And now with what's going on in Europe,
one of the most volatile commodities in the world, right?
Oh yeah. Normally, we're looking at $3, a therm for natural gas, and now we're over twice that, and it spiked up over $100 to $120 a therm in Europe, and that just shuts down nitrogen production. So there again, they are producing agriculture in Europe, Southeast Asia, etc. So the demand for those products are worldwide. And in many cases, they're tapping on our doors and offering more money. So that drives up the price. And it also then makes, as far as availability, a little bit tighter. So it's crucial. And like I said, it is that big chess game that we're currently playing in the marketplace.
Dick, this discussion falls right in line. This year, we've been working on a series, an infographic and a series on what it takes to feed the world. And you're talking about demand just now. And the reality is that by 2050, there's likely to be closer to 9 billion people on this planet. Trying to figure out how to feed all of these people, especially with a portion of the economy, the world global economy being taken offline with Russia. Is it going to be fertilizer that really helps drive this push to larger yields in places like South America and Africa and Asia that really come online with our nutrient plans that we do here in the U.S.? Do you feel that that's likely to be where the difference maker comes?
Well, I think there's yes and no, and I agree wholeheartedly. And I guess you're asking a question. I'm going to maybe answer it, maybe with some additional questions here. But everyone tries to model after what we've done here in the U.S. The American farmer is very efficient at what he does, and he's very good at producing as far as a crop, regardless of what commodity it is. Now, we have used that data, we've used that research, et cetera, to develop other countries. You had two countries that you just talked about, and that's South America, and now the next country that we're trying to develop is Africa.
Correct.
And in those two countries alone, that's mind-boggling, but in the last 2 years, supposedly, we have added 73 million acres of production just in South America.
That's an unbelievable statistic. 73 million new acres in 2 years.
So that's in 2 years. So that's 75, 80% of the total acres that we have in corn. And our acres here in the U.S. will decline, and they are declining. I mean, you look at development, you look at green energy, solar, wind farms, et cetera. We're taking a lot of our productive acres out of production, which, I despise in many ways. I just don't think it's good, sound, prudent management, especially when you look at the long term. So in this global marketplace, though, they're thinking, okay, an acre in South America or Africa is just as valuable as what it is here in the U.S. And maybe
it is not today, but has the potential to get there. Right.
But you still have third world countries, and third world countries, they just don't have the dollars to invest in their agriculture. So they are where we are, maybe in the 40s or 50s, where we saw production, and you take an acre of corn, we were 50 to 60 bushels, and now our trend line yield for this year is supposed to be a 181, and yet farmers through national yield contests have produced way over 600 bushels. So it's sound management. And
have you ever seen a 600 bushel acre farm?
I've seen 4. I've never been in a field with 6. I'll get there. Let's put it that way. But
that's wild. 400. I mean, I can't even imagine. That's unbelievable.
And it is a science to produce that. It just doesn't happen. And I think as we continue to utilize the acres that we have, how can we get our maximum production out of those? And you go back, and I just mentioned, okay, in the 40s and 50s, actually in the 70s was the largest fertilizer consumption that we had in the U.S. And we've declined in tons of fertilizer since then, even though our acres have remained somewhat the same. At that time, we were about 25% of the world's consumption of fertilizer. The U.S. today is only 10%.
Wow.
And so China, we haven't mentioned much about China. We know that their population is 1.3 billion.
Yeah, from what they tell us. I mean, who really knows? But yeah.
Yeah, I mean, it may be more. You've got India right next to it, and they're probably going to surpass China. So we will get to that 9 billion people, and the demand is they want protein-based foods, and so that means right now animal production. Do we have substitutes? Yes. But I think the demand for meat, and that's where most of our grains go to right now, is still production of livestock, cattle, hogs, chickens, etc., and poultry is very high. And then, of course, we use a lot of those grains in fuel, and that's a controversy when we have high commodity prices, and the fact they think that has in the grocery store itself. And then number three, is, of course, is export marketplace. But the U.S. has changed. We're still, like I said, very well respected because of the yields that we have, the research that comes out of our land grant use institutions, and what we do in the industry itself. But yet our footprint is becoming smaller in that global marketplace.
It's going to be an interesting few years ahead. I guess as we start to think, kind of come back down to the local level before we wrap up, Dick. We've got the early planting is behind, and we've got these high priced inputs that are sitting, sounds like, at the farm gate and or at least available locally. It sounds to me like we're not quite ready to hit any type of panic button. Most people are well positioned to still get the work done. Is that the sense you have right now? And I guess obviously by the time this produces in a few days, things might have changed. But in your area, when do they really have to get everything in and get started?
Well, in most cases, Jeff, we're in a very progressive area, but our footprint here with Prairieland goes from west central Illinois into Missouri, and the further west we go, the further behind we are. And in our area, we're right here in the immediate area where our corporate offices are, we probably have well over 50%, we may be even 60% planted on corn, and have quite a bit of soybeans in the ground too. Not that percentage, but we have several soybeans that are planted, and we have some crop up. I just put one of our locations in Missouri as in LaBelle, Missouri. It's due west of Quincy, about 35-40 miles. We just delivered our first load of anhydrous ammonia yesterday into their tanks. And that tells you how wet they are and how far behind they are. Now they'll continue with that rotation, their planned rotation, hopefully for another 2 to 3 weeks. But some of the curing, we talked about that last week, but always the cure for high prices is high prices, and the same with low prices. So the pressure in the market will mount. You being in the grain marketplace, we know how much money is coming out of other stocks and bonds, etc., and into the commodities right now. Safe place to be when you're looking at inflation, higher interest costs, etc., and trying to make that dollar earn something and have a little bit less risk in the market. But we were talking about farmers backing off. It's of their consumption of fertilizer, what they're applying. Same is going on right now. Some in South America, some of those farmers there, you're dealing with 20% inflation on an annual basis. And so how does that figure into the equation, and then buying high price inputs? So yes, we will back off consumption. That will have an effect in the marketplace that will drive prices down, but will probably drive commodity prices down. How far can we go in corn when you're feeding through cattle and poultry, and we're currently in the $7 to $8 for some old crop corn, or almost $8, and then running that through an animal to produce protein? Where's the pushback? When will it happen? Where is it happening? I think
that's a great point on the animal protein, and I think we should just mention it, is that right now we're just actually talking with a hog farmer that's in eastern Pennsylvania, and because of these high input costs, being corn and beans and meal to get to the hogs, his cost of production is like $110 a pig. And if you look at the forward curve, they're selling for 90, 80. So it's a huge gap. And he even said yesterday to one of our other risk managers, likely to cut back production and maybe even call some of the sows, because there's not much he can do other than just continue to lose money. So it is a very, very volatile environment, and ones where I think what you said early on is that you need to manage your risks. You need to work with your banker. You need to work with your agronomist, your sales, seed and chemical guys. You need to work with your grain marketing advisors and come up with a plan that isn't hope and pray. An operation, you mentioned it too, an operation that is higher, you're seeing higher farm income. And that's because your operation that was $2 million is now $6 million. So manage that, figure out the best plan. But
well, and you hit on some key points, Jeff. I mean, we can lock in grain prices for this year, even next year.
Right.
And so if we're still dealing with some of these variables that we have in today's marketplace, and we will be, a lot of this will not change during that time frame. So why wouldn't you lock in and if you're insured a profit, do so. Now, I'm not saying you sell everything, but cover part of your expenses, etc. And manage that and move forward, and then tackle another risk and develop some strategy. I mean, stress, I think I mentioned that. Stress is when you go to bed at night and you look up at the ceiling and you see the cracks, and the next thing you mentioned to your spouse, "Ooh, I think maybe we ought to paint the ceiling." But that's when you got too much stress in your life. But let's manage those stress and turn it into opportunities. And it goes back, like I said, you can be a Hall of Fame hitter or get in the Hall of Fame and be a singles hitter. And as long as we can lock in a profit, let's do so. We just got so many tools we have to manage, and we've sharpened that pencil a little bit. We've got to work with all these constituents that we have, these people in authority, and maybe the people of knowledge, to where we can ensure something on the bottom line, keep us in business.
Yeah, I think that really sums it up, Dick. I think from here we're gonna wrap up today's discussion with a little bit. If you could just share a little bit more about about your business, Prairieland. You guys are all over the area you mentioned, all the way down through Missouri. You're part of the GrowMark system, I believe you shared.
We are part of the GrowMark system.
Okay.
We've taken several companies and went together, but the last two were in 2014 when we joined together two companies to form Prairieland in the GrowMark system. And so we're very fortunate to have the territory that we have and the opportunities. But we're in about 18 counties in Illinois and into eastern Missouri. And we go from Illiopolis, which is just due west of Decatur, all the way to Kirksville, Missouri, and points both north and south from them. We're very blessed because we have river traffic, and that helps us on inputs. But more importantly, it also helps us as far as on our exports of grain being on the river. And then we have two, sometimes three. We do have three shuttles or inland terminals here to move grain, specifically corn. So when you look at today's marketplace, and sometimes we're actually going to be above the market, our basis is pretty thin, in some cases on the positive side. So that gives us opportunity here in the marketplace for our farmers to utilize that asset to where it's a real advantage for them when you're marketing grain.
That's good. And if people want to get in touch with you, they can come to Jacksonville office, maybe get on the Ferris wheel. I see there's a famous Ferris wheel in town. Is that right?
We still have, yes, the Ferris wheel that was developed in Whitehall, the House area, and then came to Jacksonville in the early 1900s. and they still make and repair those same Ferris wheels. They did such an excellent job by there's still new ones going out the door, but they refurbished a lot of Ferris wheels throughout the U.S. and some into other countries in Canada and even down in Mexico. So it's a small world.
It's an institution over there. That's great. That's great. All right. Last question I have for you. This is kind of do a fun thing at the end of each one of these, and always find people's responses of interest. So if you could be a professional athlete or, get involved in any sort of extreme sports, what would you have done in your life, or what have you done perhaps?
Well, I always played sports and multiple, and that was, football, baseball, and basketball. But I probably like basketball as well as any of them. But so they're all fun. And, the biggest thing, and that's just not sports, but, what we do in our free time and our off time, and, how do you relieve as far as stress? And, whatever you do, you enjoy your job. I enjoy mine, or I still wouldn't be doing that situation, but you have to enjoy what you're doing. And, the key, I think, now is how do you find relaxation, and part of that, and that was in the bio, why it's family and it's hobbies, etc. And then just people, good relationships, and being able to talk with the caliber of people like yourself, and the opportunities that opens up, and the perspective that we have to improve upon what we're doing. So those are the key aspects that I see, and the opportunities that we have. And we're so blessed here, not only locally, but here in the U.S., and to be part of a great country, and be in part of the food chain here, where we're helping as far as consumers, and putting our best foot forward so they too can improve upon their livelihood. So it's all integral. Now, that's a long ways from where you just talked about what would you want to be in sports, but I think the key is, it
all rings true. I mean, I'm involved.
Well, life is a ball game, and you can foul tip a ball, you can strike out, etc. But how do you come back in? You don't like too many no hitters, but like I said, let's keep playing that game, score some goals. They don't all have to be 3-pointers. A layup on a fast break is just effective 2 points as it is 15 feet out.
Enjoy some craft beer when you're done.
That's right.
Perfect. Well, Dick, we really appreciate you joining the show today. It's been a lot of fun. We'll get your contact information. Is that the best way to get in touch? Just your email and phone, or how would you like people to reach out to you?
Either one. Unfortunately, the cell phone's always on.
Oh, yeah.
And one of those jobs is, when you don't have supplies, and it's rang a few times here. What do you do? Truck underneath it, it'll get there. Either that, or we'll order it. We didn't touch much on crop protection. That's even probably a bigger mess than we have in the fertilizer supply side, but maybe that's for later in a different podcast.
Yeah, we can do it again. I'd really actually like to do this again, maybe a month or two, maybe see how things actually shook out from what we talked about, and just catch an update from you anyway. But look forward to the next time out there in Illinois, and we'll plan to get together in person. So thanks again for joining the show, and we'll get this put together.
Have a good day.
Thanks, Dick.
All right, bye.
You've been listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website to read our blog and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.
This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.